On this episode of What's Going On with Shipping, it's the April 19th, 2022 edition of What the Ship, top 5 maritime news stories. I'm your host, Sal Mercoglano. Welcome to this episode of What's Going On with Shipping. Man, has there been a lot going on over the past week. We had the Russian cruiser sink. We had a museum ship up in Buffalo sink, the Sullivans. And of course, we had the ongoing issue with Everforward in the Chesapeake. And not to mention that, the question about whether or not there's a global recession coming to shipping. So we're going to break down those stories and more on this episode. If you're new to the channel, take a minute, subscribe to the channel, hit the bell so be alerted about new videos as they come out. Let's go ahead and jump in to story number one. Story number one takes us to Chesapeake Bay and the successful salvage of the motor vessel Everforward. So on Sunday, April 17th at dawn, Easter Sunday dawn, they were able to free the vessel, pull her off the shoal and into the channel using 2 anchored barges along with a fleet of tugs. They were able to pull her out. This story right here from John Conrad talks about this. Salvage team frees Everforward container ship. It was a long slug. He even cites my tweets out there that show the vessel moving off and out into the anchorage. This story by Mike Schiller is great. It has a photographic history of the event, kind of takes you through the 35-day salvage. I use that cover photo right there for this week's episode. And then this story right here by Kim Bigger over at Freightwaves, Everforward Refloated will be inspected before returning to service. That's really the big thing right now. So Everforward has been moved down to the anchorage south of the Chesapeake Bay Bridge. The vessel will now be inspected by divers for the ship's classification society. So all commercial vessels have classification societies. These are third-party groups that ensure the seaworthiness of the vessel. They're not the owner. They're not the flag state. This is an entity that's hired by the company to ensure the classification. In this case, I believe it's Lloyd's that does it. So they're going to send divers down around the vessel. This is the reason she was taken out to the anchorage off of Annapolis, deeper water so they can get under the vessel. They'll photograph it, do surveys of the ship. They'll climb into the interior of the ship, make sure watertight integrity is safe. They want to do this before they issue a certificate saying that the vessel is seaworthy. It's been sitting on the bottom for 35 days. So they're obviously worried about potential hull damage. There was also the issue that the vessel did not use its propeller, its main engine, to come down to the anchorage. Now, I've been told not to read a lot into that they intended to tow the vessel the entire way. That could be because they want to get in, clean out the intakes to the engine, make sure there's no mud where the water intakes are. It's not exactly clear. But we're told basically not a problem. They're going to check the engine and everything. Assuming everything is good, the ship will return back to Baltimore to reload the 500 containers that were taken off. They're not going to be loaded back on board at anchor. They're going to go back up to Baltimore, load those 500 containers back on, and then she'll resume her voyage. She's slated to get a berth down in Norfolk. That has not been scheduled yet. And then one up in New York and offload her containers. And then she will sail to Asia, probably to offload the empty containers and then for a dry dock. The vessel will need a full dry docking after being sitting on the bottom for as long as she was. The other issue at here is the general average claim. Since the company did declare general average for the containers to come off the vessel and for the owners, the beneficial cargo owners, the BCOs, to get their containers, they're going to have to issue a bond or procure a bond, which will allow them to get their containers, but may make them susceptible to more payments down the road. There is no telling how much this salvage will cost. Ever given in the Suez was over $300 million. This salvage, I just ballpark with my estimate, around 150 million, because of the amount of money involved in tugs, dredging, salvage, cranes, barges, you name it. Could be a lot more than that too. I don't know. I'm just taking an estimated guess right now. That would be spread across the insurance for the vessel, the hull and machinery, and then by the company and the cargo itself. Remember, this vessel was only half loaded. Yeah, it's full of containers, but only half those containers are full. She'd already offloaded in Savannah and Baltimore, so it's just the cargo going into Norfolk and New Jersey that's going to have to spread that cost. This is a story that's not anywhere near over. We're still seeing it with Ever Given a year later. My big issue is, what are the ports going to do to ensure that things like this doesn't happen? Is the Port of Baltimore, for example, slowing down passage through the top of the Craig Hill Channel? Are they requiring standby tugs or larger tugs to be procured by the port? What are we doing about future dredging? And again, I think the whole issue comes in here to the infrastructure in our ports that are severely lacking. All right, that was story number one. Story number two takes us to the Black Sea and the sinking of the Russian cruiser Moscow or Moskva by the Ukrainians. So, man, there is a slew of analysis going on Twitter right now about what happened to this vessel, because we finally got some images of the vessel. This is the Moskva in better times. This is her after the damage. Man, again, John Conrad, H.I. Sutton, there's a slew of people who've done a lot of great analysis on Twitter. I have them on my Twitter feed. If you don't follow me on Twitter, at Mercoglianos, head on over there. But a couple of things really stand out about this real quick. Number one, it looks like she got hit by the missiles up forward here, just below the heavy black smoke. You can see the black marks there along the hull. You can see fires burning on the vessel. You can see these black marks down the hull. That's where smoke and soot has come out through the portholes of this vessel. The surface air missile deck has basically collapsed from heat. I think they had a massive internal fire that spread through the engine room and back after the vessel. You can see her listing the port. There's a tug on her far port side, on her, starboard side out here, spraying water. And there's a lot of analysis going on. I'm not going to jump into analysis of what sunk the Moskva. There's debates about this and the damage it's done. She's obviously abandoned at this point. The life rafts, the launches are gone. There's no simile of life left on board. And before we get too harsh on the Russians for losing a vessel at sea, let's be very careful about that. Remember, we lost Bonhomme Richard at the dock in San Diego 2 years ago. And this is a ship at sea. Now, granted, different scenarios, different situations, but need to be really careful about this. A couple of stories here. This is the Reuters story. What was the sinking of the Moskva missile cruiser mean for Russia in the war in Ukraine? This one deals a lot with the naval aspects, and they talk about a whole series of questions. This one by Naval News is a really good one. It talks about the chain of negligence that led to the loss of the cruiser. You know, what caused the fire? Was it an ammunition explosion or a Neptune strike? It talks about the potential of the ship being distracted by a TB2 drone and then hit by two Neptune anti-ship missiles, which are basically derivations of the American Harpoon. It's a subsonic version of the Russian version of our Harpoon, the Harpoonsky. It talks about the fact that the Russian cruiser tracking radar was maybe distracted because the Russian surface-to-air radar only has a 180-degree field of vision, and it may have been tracking the drone versus where the Neptune missiles came in. The chain of negligence that put this ship at risk, which I think is a lot. Poor intelligence, inadequate sensor and weapon systems, poor training, man, just a whole lot. And this is H.I. Sutton's site, but go look at it. Really interesting story on how the Moskva was hit and eventually sunk. The largest naval vessel sunk in combat since the General Belgrano during the Falklands War. The first ship hit, I think, by a surface-to-surface missile launched by land since the Glamgoran in the Falklands War, but not as, the Glengoran wasn't sunk. You got to go back to the Blucher. And I did a video on this where I talked about this. But the thing I really want to talk about is the continued war being waged against commercial vessels by the Russians. This story by Sam Chambers is Splash 24/7. Russia's targeting of merchant ships branded a war crime. We've seen multiple vessels hit now and sunk by the Russians in port, including a video that was put out showing the Russians liberating crews. They're not liberating any crews. Let me be clear about that. The whole reason for the ships being stuck is because of the Russia-Ukraine war, and that's being precipitated by a Russian invasion of Ukraine. So I'm not buying that they're liberating anyone here. But you see this is an image of the port of Mariupol, where a Dominica flagged vessel, the Asberg, was sunk in an attack against Mariupol. But this is the other big issue here, is the rising insurance costs involved here. Insurance costs in Black Sea zones reach new heights, and underwriters were reported to be charging as much as 10% of the value of the ship's hull for additional war risk insurance. Jump down here a minute. The insurance would now probably exceed the cost of hiring the vessel, says Bloomberg, noting that a 50 million five-year-old tanker hauling a standard 1 million barrel Russian cargo would need $5 million just in insurance premiums, compared to the 3.5 million approximate cost of hiring the vessel in the first place. It is more expensive to get the insurance on the vessel than to charter the vessel. Now, we're not seeing a huge decrease in the number of ships going through the Black Sea. However, this can spill over because of the use of the Neptune missiles. We can see the expansion of this. Remember, the Ukraine's saying they're just targeting Russian vessels. Well, sometimes those missiles don't go where they're targeted, or you don't know what you're targeting. This is how the Iran-Iraq tanker war escalated over time, and there's no telling what happens in this scenario. So, how's story number 2? All right, it's story number 3, but it really should be story number 1. I just didn't do number 1 because I wanted to do the updates on those 2 other stories. But this is the story that's looming on the horizon that we all need to be watching. So this is from CNN. The biggest risk to the global economy no one is talking about. Now, let me be clear. People are talking about it. If you're watching this YouTube channel, you're talking about it. People I know are talking about it. It's just the people that CNN talk to are not talking about it. Nearly 400 million people across 45 cities in China are under full or partial lockdown as part of China's strict zero COVID policy. Together, they represent 40% or $7.2 trillion of annual gross domestic product for the world's second largest economy. Analysts are ringing warning bells, but say investors aren't properly assessing how serious the global economic fallout might be from those prolonged isolation orders. Global markets may still underestimate the impact because much attention remains focused on Russia-Ukraine conflict and U.S. Federal Reserve rate hikes. The most alarming is the indefinite lockdown in Shanghai, a city of 25 million and one of China's premier manufacturing and export hubs. So Craig Fuller over at Freightwaves did a series of tweets about this that were just fantastic. But fortunately, Craig put this together into this story right here. Chinese lockdowns will create shocks to American supply chains, but China is the biggest loser. Looking at this story here, Craig just goes into great detail. What happens in China doesn't stay in China. And for American supply chains, that's usually a good thing. American businesses have become dependent on low-cost goods coming from Chinese suppliers. But in a post-COVID world, that may be entering the second Cold War. Reliance on China means that American businesses are held hostage by an autocratic regime that seems oblivious to the damage it's doing to its own economy, let alone the global one. Come on down here a little bit. The draconian approach had merits in the early days when the risks of the virus were unknown and there was a lack of understanding of how the virus spread. 2 years later, and billions of doses of vaccines that have allowed Western countries to open back up, a lockdown of any sort seems impractical and aggressive overreach. And this is what you have, this lockdown in China style that he talks about. And this is the data that really comes in. Freightwaves has their own analytics called Sonar. Container volumes out of Chinese port begin to drop on April 6th, and as of April 15th, have declined by more than 31%. This slowdown in volume will impact the U.S. surface freight market as less volume of cargo enters U.S. trucking and U.S. intermodal networks. Now, understand, we had a slowdown in China early in the year because of the Chinese New Year, right around the beginning of February. That slowdown has given the U.S. an opportunity to kind of catch its breath. And you see that on the West Coast ports where the numbers are way down, only about 30-something ships waiting off LA and Long Beach today. Now, a lot of that traffic has also shifted over to the East Coast where we're seeing long waits out of ports like Charleston, Houston, New York, New Jersey, and Norfolk. But now we see this wave of ships coming across post Chinese New Year, but then behind it is nothing. And what we're getting is pulses coming across. We're not getting a steady wave, we're getting these pulses. And these pulses cause disruptions, particularly in the trucking market. And that's what Craig is talking about here. Come down here a little bit. But we also don't know the situation for raw materials coming into the country. This is the big thing that Craig hits on. It's so important. We like to think China just exports. It's all they do is export. It's all, they send us their crap. That's what we like to think. That's not 100% true. China imports not just raw material, but components for the finished products. A lot of what Chinese manufacturing is assembly. They take parts from all around, put them together into a finished product. Right now, off Shanghai, off Ningbo, off of Hong Kong, ships are waiting to not just load, but to offload. That's the key thing. Freight networks are bidirectional, meaning that the ships waiting off the coast of China contain some raw materials that are used in factory production. This also, by the way, affects bulkers that now have to grab bulk grain and ship it to North Africa, East Africa, South Asia, the Middle East because of Ukraine, Russia. But that's a different story. There are an estimated 300 container ships and 500 bulk ships off the coast of China, loaded with cargo of everything from machine parts, components, to metal ore to grain. The commodities that are on these ships are used for domestic consumption, but also play a vital role in Chinese manufacturing supply chains. That's the key. Even if the ports open tomorrow, you've created this massive delay. Those imports have to be offloaded, have to be distributed, have to get to manufacturing sites, have to be incorporated into finished products, and then loaded in containers and back. This is also why, by the way, China wants empty containers out of the United States so bad, because they want to just unload stuff they need vitally. They don't want to deal with grain and cargo coming from the US that isn't as important as these other cargoes. Come down here. There will be demand destruction. Eventually, all the pent-up orders will be shipped. If the process for ramping up shipping volumes happens quickly, then American ports will likely see a replay of last year's shipping influx and backlog. However, if the process takes longer, it could be worse for the economy because it would erode supply chain forecasts and product orchestration. This will have long-lasting impacts for decades to come. Man, Craig bangs it right out of the park on this one. He is exactly right. Craig is looking, I kind of critiqued Craig the other week when I did a video on is the global recession hitting the maritime trade, because I said, well, the global shipping is at a different pace than trucking, for example. But here he's looking at all those pieces. And I think he's making an excellent point about this. This follow-on story here by Eric Kulich is another great one. Get ready for the next supply chain shockwave. Cargo backlogs in Shanghai, a precursor to global port congestion as COVID crisis drags on. Understand, when this clears in China, this is going to hit right when the West Coast labor negotiations are going to come to their peak. So the question is, are the West Coast ports going to be ready for taking this cargo when they come on? Eric goes into great data here. Again, he uses the Sonar platform, talking about the freight piling up in China, talks about the impact spread beyond Shanghai. It's in multiple ports. And now, even though the ports aren't closed, the road, the rail, the trucking, the manufacturing is all being impacted by this, meaning there's not cargo coming in. And what this means is ship delays at the ports of Hong Kong and Yantian are being impacted. There are delays in multiple ports throughout China. And as this lockdown spreads, you start seeing the impact right here. And you can start seeing how the delays are just resonating. This story has the potential to be the one that sets the tone for the supply chain going forward for the year. It is not a great story by any means. That was story number 3. All right, story number 4 is the flip side of this, which is a Greg Miller story from FreightWaves. Commodity shipping stocks are trouncing Dow Transport Average. So back in January, I had Jay Mintzmeyer on the show. I'm going to get Jay back on here in a few months, talk about this maybe half the way through the year. But Greg loves these pieces. He loves writing about stocks and the situation with stocks. And man, one of the best is Greg when he goes on to this stock angle. I think it's great because it shows what's going on in the market. So as you look right here, one of the things that Greg talks about is the Dow Jones Transport Average has slumped 11% since late March on fears of waning domestic demand. True. I mean, we've seen the Dow Jones fall, but we've also seen the transportation average fall. Container shipping stocks have dragged down along with domestic transports. Not so with commodity shipping stocks, which have very different drivers. Tanker, gas carrier, and dry bulk shipping equities are heading up. Shipping stock charts were awash in double-digit green numbers on Thursday, a day when the main indices were in the red. And what Greg does is he breaks this down and looks at it by the different industries. So, for example, in crude and product tankers, he talks about the fact that the Dow Jones Transportation Average is down 9.9% year to date, yet in terms of tankers, product tankers, Scorpio is up 77% years to date. Sakos Energy Navigation, 68%. Nordic American, 60%. TK, 57%. Euronav, 47%. And International Seaways, 41%. Don't forget, we've just had a story last week talking about the merger of two of these big companies, Euronav and Frontline, together. So you can expect to see that Euronav potentially change with if this merger comes to bear. He talks about LNG and LPG stocks and how they're doing. Shares of Flex LNG are up 36%. Gas log partners, 30%. So again, seeing big changes in the LNG, LPG sector. Talks about Navigator holding up 58%. Dry bulk, again, looking at what's going on with grain shipments around the world because of the loss of Ukraine grain, the potential impact on Russian grain because of higher insurance rates in the Black Sea or people not wanting to buy Russian grain. You're seeing this right now. So they have since rebounded despite very weak rates for larger Cape-sized bulkers. And these are the ones, Cape-size, the ones go around the Cape of Good Hope. They tend to be big. In terms of the smaller sizes, Genco up 54%, Eagle Bulk 50%, Golden Ocean 47%, and Star Bulk 34%. So again, this is looking year to date. You're seeing these markets, the dry bulk market, the gas market, the oil market, all of them showing rises. And even in the container freights, he talks about, unlike other ocean shipping segments, container stocks have fallen by double digits since the end of March. And he uses the example here of a few. Danos closed down 17%, yet it was still trading 16 times higher than it was in January 2020. That's true. If you take this graph out beyond 2022 all the way to 2020, you'll see how high it actually is. It's ridiculously high. And then Zim and Matson are down 6% and 3% years to date. Again, but at the same time, you're seeing the issue with the spot rates. Carriers are exposed to near-term U.S. consumer demand via spot rates. However, roughly half their revenue is covered by long-term contracts that have already largely been negotiated for 2022 at record high. The shipping companies they told people, listen, don't count on the spot rates. Spot rates are through the roof. Do you really want to base yourself on spot rates? Get your locked-in rates now. And man, they locked in at high rates, which means that the container shipping companies are going to see growth. This is evergreens. Quarterly operating revenues. Look for Q1, where they were in 2019, 2020, 2021, and now 2022. Man, even with ships getting stuck, they're still doing pretty good. And you see that growth. It says right here, Chinese COSCO recently disclosed that it expected Q1 2022 net profits, 27.6 billion yuan, $4.3 billion. Man, it's good to be a communist. Communists are making good money these days. So great article by Greg Miller on what's going on with the shipping industry. And again, I look at a lot of people who talk about this. Jay Mintzmeyer is my go-to guy. I always love what Jay does, but there's several others I follow on Twitter that I repost all the time. So that's story number 4. Story number 5, again, I always pick a story that I find unique that may not make it through the noise of everything else. And it was this story in Container News that really caught my eye. Vietnam unveils plan for US 1.5 billion worth container shipping fleet. Just a great little story right here. With learnings from the disruptions caused due to the Russian invasion of Ukraine, the Vietnam Logistics Business Association, which I think that's an interesting sounding organization, has moved to acquire its own fleet to run business on Asian shipping routes to China, Korea, Japan, Malaysia, India, Singapore, and the Middle East. The association said it will need $1.5 billion to build new ships, purchase old ones, and rent and buy containers for Vietnam's container vessel fleet. The move is taken after Vietnam Maritime Administration said the closure of services by major European shipping lines to and from Russia can create opportunities for Vietnamese ship owners to increase their market share in the days to come. The association said over the next 3 to 5 years, it will focus on investing in the shipping sector, which will be mobilized mainly from the private sector, added by support measures from the government. When I go down here a little further, the association will be using 1,800 to 2,500 TEU vessels, since this type can dock primarily at Haiphong Port due to its low draft below 9.5 meters. The service will need a total of 14 ships for the first year, and in the second year, 6 additional vessels will be deployed on 2 routes. It goes down here. In 2021, the Vietnamese ports handled 24 million TEU, which translates to an increase of 7% compared to the previous year. The Vietnamese shipping fleet's vessels can carry only 7% of the total export-import of the country, while the rest are borne by foreign shipping lines. Just to be clear, in the United States, the amount of containers that are handled by non-US shipping lines is tremendous. We only carry less than 1% of our own import exports. And so Vietnam, that carries 7%, realizes that that's too low of a number. They want to go up. The reason I raise this question and the reason I raise this story is here's Vietnam realizing, listen, we are at the grip of these foreign shipping companies. They can do what they want. They can block us, they can charge us whatever rates they really want to charge, and there's very little we can do about it. But if we put some competition on the field, if we have our own shipping line, we can go to places that are not going to be serviced by these container liners. And more importantly, it gives us our own interest in the shipping field so that when there are disruptions, we can handle it, and we have a fleet to do it, something the United States should be learning. And there's no end to irony to this story. I understand the whole concept of containerization came during the Vietnam War. The concept of containerization by Malcolm McLean at Sealand couldn't sell that idea. He could not get that idea to go anywhere. But where it was sold was in Vietnam in 1965, when 120 ships were waiting to offload at the port of Saigon, today Ho Chi Minh City. And Malcolm McLean sent 3 of his top aides to go talk to the Army's Defense Logistics Agency and tell them we can clear the backlog with 11 ships, 11 container ships. And if he did not do it within a year, it's amazing that he did. And he did it. Not only did he ship the material into it and develop ports at Cam Ranh and Da Nang, but he also set up an intermodal system where they freighted the cargo from the docks 35 miles inland to terminals and ports. He created intermodalism. And now we see Vietnam jumping on that bandwagon, wanting to create their own. So 5 stories in the maritime sector that range from ever forward in the Chesapeake Bay to Vietnam getting their own merchant fleet. I hope you enjoyed the stories. Be sure to subscribe to the channel, hit the bell so you'll be alerted about new videos as they come out. Leave a comment, and please leave comments. I enjoy comments. Please be constructive. I don't like derogatory. There's no reason to be derogatory. I am all for criticism and comments, but more importantly, you all raise some great questions. And sometimes you all think of things that I don't think about. The goal of this channel is to raise the purview and the interest of global shipping. And hopefully we're achieving that. So be sure to leave a comment, share it across social media, and if you can, support the channel through our Patreon page that allows us to bring you these videos and keep you informed on global shipping. Until our next video, this is Sal signing off.